Are U.S. bank stocks headed for another crisis? The recent tremors in the market, triggered by loan defaults and allegations of fraud, have investors on edge. Several bank stocks experienced significant drops, raising concerns about the overall health of the financial sector. Let's dive into what's happening and why it matters. Zion's Bancorporation, ZION, took a 12% hit after announcing a $50 million loss in the third quarter due to issues with two commercial and industrial loans in its California division. The bank alleges fraud and has initiated legal action to recover the funds. This immediately begs the question: how thoroughly were these loans vetted in the first place? What kind of oversight failures allowed this to happen? Western Alliance saw its stock plummet almost 11% following its own lawsuit against Cantor Group 5, LLC, also alleging fraud related to a business loan. The bank claims Cantor forged title policies related to liens on properties securing the loans. Western Alliance is trying to reassure investors, touting its strong credit structures and diversified business model, promising more details in their upcoming quarterly report. But here's where it gets controversial. Some might argue that these assurances ring hollow in light of the allegations. Is this an isolated incident, or a sign of deeper problems within the bank's risk management practices? Even investment banking giant Jefferies, Jeff, wasn't immune, with its stock dropping 9% after an investor day. The firm has exposure to bankrupt auto parts maker First Brands, and its stock has taken a beating since the bankruptcy announcement, dropping more than 1/5. Jefferies' investor day was closed to the press, which raised eyebrows. Morgan Stanley analyst Ryan Kenney noted that while the core business seemed healthy, some questions were unanswered on what exactly went wrong with First Brands and whether or not JEF could have mitigated risk in advance. And this is the part most people miss. The lack of transparency from Jefferies only fuels speculation and distrust. Why the secrecy? What are they hiding? Stephen Bigger, a banking analyst at Argus Research, succinctly captured the sentiment. It shows you can't take credit quality for granted, and poor-performing credit quality at one bank can drag down the group quite fast. This is a crucial point. One bank's misfortune can quickly spread fear and uncertainty throughout the entire sector, leading to a domino effect. This is why vigilant risk management and transparency are absolutely critical. The broader market felt the impact, with the regional banking index dropping nearly 6% and the S&P 500 losing almost 1%. Wall Street analysts are drawing parallels between Zion's situation and the First Brands collapse, highlighting potential gaps in lenders' oversight and raising concerns about transparency in the credit market. Remember Jamie Dimon's recent comments? The J.P. Morgan Chase CEO spoke about anxiety in the credit market following the bankruptcies of First Brands and subprime lender Tricolor. J.P. Morgan even wrote off $170 million related to the Tricolor bankruptcy and is reviewing its controls. His one cockroach analogy, suggesting that one problem often indicates more hidden issues, has resonated with many investors. These events are particularly sensitive given the recent history of bank failures, most notably Silicon Valley Bank's collapse in 2023. High interest rates triggered paper losses on its bonds, leading to a fatal deposit run. The First Brands and Tricolor bankruptcies have further amplified scrutiny on banks' risk controls, especially in the opaque private credit market, where complex loans make it challenging to assess participants' exposure. As Mike Mayo, banking analyst at Wells Fargo, pointed out, in times of loose credit, you are going to have more instances of fraud. There's a heightened need to watch the recent issues. This is where the discussion becomes truly interesting. Is the current situation a sign of systemic weakness, or are these isolated incidents? Are banks adequately equipped to manage risk in today's complex financial landscape? And perhaps most importantly, what steps can be taken to improve transparency and prevent future crises? What are your thoughts? Do you think the market's reaction is justified, or is it an overreaction? Are stronger regulations needed to protect investors and the financial system? Share your opinions in the comments below.